All right, traders, what's going on? Jamie Saettele here. It is June 10th, 2015, and this is your midweek strategy webinar for this week. So, some very interesting moves going on here in just the last day, particularly with some of the dollar majors, dollar yen in particular, maybe to a lesser extent Aussie and Kiwi, obviously. So we're going to look at dollar yen here in a bit. We all know that we're coming off of a very significant level in the the long-term parallel, right? These are the same charts that you see on the weekend updates, right? In the long-term charts page, you've got the 2570 area, which was one of the objectives, 61.8, or I should say 1618 extension of the years or of the December range. So it's one of the breakout objectives, right? So what people will do a lot of times, breakout objectives, you know, kind of classic charting principle, if you will. When you break out of a range, the target for that is going to be, the width of that range added to the breakout level. In that case, you would get 128.12. But another, target that is oftentimes reached, and sometimes you don't even get to the so-called 200% level, is the range multiplied by 0.618, and then add that to the range. In this case, that was 2571. So for us, we're short dollar yen last week going into NFP. Of course, NFP, you get the blow off top, and we haven't traded higher since. Case with the dollar, in particular. Luckily, we have gotten into some decent trades of late. Aussie is the one we're in right now. So we'll come back to dollar yen in a little bit. I do want to start with the euro. And afternoon, Idris, Aussie, yes, Stefan, what's up, Mark? So let's start with the euro. Again, I want to go back to this idea of a big short covering rally, right? With the euro, okay, and there have been really several major declines in euro dollar since since the inception of the euro. Got some questions here. Dan Wilcox asking, surprised you got out of euro with QE4 right around the corner. I'm not sure what you're referring to there, Dan. I like euro higher. Again, I don't trade off fundamentals. So I'm not sure if you're referring to long or short on QE4 in the euro. Remember, QE in Europe, dollar weakness, right? Yeah, I mean, I can't trade like that. QE4 is not going to tell me where to put my stop. QE4 is not going to tell me where to enter or exit. QE4 really is, it's fine to talk about that stuff at a cocktail party. You want to be well educated. But as far as trading, for entering and exiting the market, you're not going to get any sort of benefit out of QE4, in my opinion. To each their own, of course. So we were looking at, I guess it was last week at some point, I'd put up a chart comparing the euro or the current euro dollar chart, if you will, with that of after the financial crisis. Okay. And I believe that chart can be found, it's somewhere in the swing update. Let's find it so you can get a sense for what we were looking at then. Let's see. Get the swing update here. I think it was the 2nd or 3rd of June. Might have been 3rd. Yeah, this is it. Okay, so if you didn't see this, then you probably want to check this out. Okay. This is, again, the 6-3, June 3rd swing update. And the idea was, we had seen a very interesting 2-day rally in the euro at that time. We'd been long since that Monday, and this was last Wednesday. So we had one 2-day rally of something in excess of 3%, right? As you can see here, 3.2%. And really, we've only had that a couple times in history. So when you see something like that, it doesn't, it's not a signal in and of itself. What it is it tells you that you have a rare event, in this case, a 2-day rally in excess of 3%. And so it would make sense to look at prior instances of 2-day rallies in excess of 3% to see if there might be, some sort of comparison between the two events, are they in similar areas of their cycles, so to speak. And in this case, the answer is unequivocally yes, in that you had obviously a massive decline into the financial crisis lows in 2008 at October, this year into March, okay? The first rally, which no one obviously really believes. The second pullback, or the first pullback, which, is to most people is the beginning of the resumption, the beginning of the resumption of the trend that's been going on. The second rally, okay, which is still kind of treated like a bear market rally. The second pullback, okay, which again is just part of the broader downtrend. And then we start to see the real sharp advance. So, that's what leads to the squeeze, right? It's kind of 1-2, 1-2, rip higher. And what I wanted to point out is the fact that when this, again, so-called massive short squeeze ended in 2008, it ended right at the year open price and the 200-day average, really the pip on the 200-day average. So when you note that, it makes it interesting to note that the 200-day average is 117.60s right now. The year open is 120.86. So there is obviously quite a good deal of space here, but there's you want to be aware of these levels. And Mark with a good question here. Don't those things, massive short cover rallies, coincide with some sort of catalyst? And then you said not that the catalyst itself is important. That is exactly correct, right? We're not trying to sit here and figure out necessarily what the catalyst will be, because let's be honest, that's not all that important what it is, at least not to me, right? What's important to me is the money that's going into my account. In this, what you want to understand is you study the market, and you understand technically that a market could be in a position to benefit from a catalyst, right? News cycles, are fairly, constant, in their ebb and flow for the most part, right? You look somewhere, there's always something screwy going on. I mean, for example, and not that this is a great example, but if we talk about like Syria, okay, do you remember when oil was going absolutely nuts on the upside back a couple of years ago, like right here in 2013, and we had the big spike? This 828, August 28, 2000, that was on a Syrian news headline about some sort of invasion. Okay, now Syria is a mess and still is a mess. Is there, did the fighting stop? No, right? But crude was in a position at that point. It was extremely bullish, and it was in a position to basically rally 5% in one day on that news. But it, and then it failed. Okay, it was into a bullish sentiment extreme. So, yeah, there are always going to be news events. My point is with this is what issues going on in Syria haven't gone away. Okay, Syria did not make price all of a sudden rally, and then for the rest of the last 2 years, no one all of a sudden cares about Syria. It's the fact that the market's in a technical position to do something. In this case, it was in a technical position to blow off. Okay, it needed an excuse to do so. So if we bring it back to where we are right now with Euro, yes, Euro is in a technical position to rip a lot higher than where it is right now. Okay, again, what's the catalyst going to be? I don't know. I have some guesses of what it could be. But yeah, that's where we are. We are in a position to potentially break out big time on the euro, right? So, what the catalyst is, we'll see. We'll eventually figure that out. Let's get back to the task at hand, though, which is really getting in a long position, or back into a long position on euro. So we had a good exit at 1270. Market came back down Friday, dipped. This was NFPs. I personally was buying euros kind of throughout Friday afternoon, and just total news fade, and here we are, 300 pips higher. So as far as in a so-called official swing trade, where you might want to look at the long side. So as I mentioned this morning, we have what would be termed here on the hourly a raised floor, okay, where former support in the euro, which was this line right here, okay, this is an hourly chart, by the way, is not being met. We're finding support before that. In other words, this is a really strong market. So you could look to trade long into this line again, okay, with a stop down here. 112.55, or you would be potentially looking to get long near 112.24 or so, 112.25, which happens to be 2 equal legs down from the high. In this case, if that were to happen, you'd want a pretty tight stop. So if you were to get long at, say, 12.26, 12.27, whatever, you would want a stop probably below 112, give yourself some room. Because if that fails, the next support probably is not back until 11.50 at the earliest. Okay, so I think the swing is long on euro at this point still. Okay, it has been for some time now. But as far as getting in and defining your risk, your first stop point is 12.55 below the low here from this morning. The second place to look to get long if that were to fail would be 12.25 or so. The third place would be down at 11.50. So, how to, know when to implement this and when to make it a trade and when not to. Look, when it comes to trading the euro, the best times to trade it are typically going to be during European hours. So starting at 3 in the morning or so in New York and into noon in New York. Okay, so I personally don't like to have triggers that happen in euro in Asia, or because it's more than likely that price is not going to be all that important as a high or low for the day. And I don't like to do anything in the late afternoon either, unless it's, you have like a bigger news event that day or something, or you have Fed minutes or whatever. So, with euro, it's not totally cut and dry. It's I think it's going to be one of those where you have to try a few times to get in to the position. Gun to my head, I'd say, look, the 12.25, 12.30 area looks like the best spot to do it at some point. Because, look, if you were to come into Europe tonight, you'd have this lower parallel down into 12.30s, all right? So, I'll be going over this stuff, obviously, and trying to come up with develop a plan, if there is one, for tonight with the post, and if there's any orders they'll be put in. Let's see. Here's a question from Chintan. Can you look at pound yen? Past decisions dip hard overnight, recover, not making fall through in shorts. What's your technical? Yeah, I'll check it out. It's pound yen. It's kind of like everything, right? It's like trading the S&P. It's gonna make sure it stops everybody out first, okay, and then it will make its move. All right. So hold on here. hold on 1 second here. I'm having some problems with my computer. Just give me 1 moment here. All right, we're back. Sorry. Okay, so other things I wanted to go over, and then I'll get to questions like pound yen, S&P 500, etc. Let's look at the Aussie dollar. First off, here's the euro. Again, just follow these slopes. You know, you've got these charts on the long-term page, but you know, the support at the beginning of the week from the sliding parallel held like a charm. I don't think there's any doubt at this point that we are working with the correct slope as far as this is concerned. You know, using the low here, the high here, and the low back here from late May as the 3 pivots to draw the fork. And the target really, you know, by the end of next week, there's a confluence up again at that 118.20 area. So euro still have plenty of upside. Any weakness should be analyzed for a long position. Aussie dollar. So we got a great entry last night. Was able to get in at just a few pips from the low, really. And you can see that we've got, again, what appears to be the right very short-term slope to work with. This is a daily chart. The next trouble area is probably going to be upwards of 78.70 for longs. But keep in mind that if we do push above this high of 78.18, the target is what, 80.39? 80.39 on the weekly chart. You can see what that level is. It is slope, longer term slope resistance. So 80.39, if it reaches this week, is all the way up here, and it's the high week close. Okay, so that's obviously a pretty big move from here. We're talking 300 pips on the upside right here. But we do have news tonight. And again, this speaks to what we were talking about earlier as far as catalysts, etc. So I know, you know, yesterday, whatnot, whatever, that there is Aussie employment tonight, and there's Aussie inflation expectations, right? But I'm not in the business of necessarily analyzing the news, so to speak. Okay, I'm looking to analyze the. Screen keeps going out. Apologies for that. I'm in the business of analyzing the market to trade it. So I know that I want to get into that position 76.40 beforehand, okay? Because if it stops me out, that's fine. I know exactly what my risk is, and I'm out a small loss. But if it goes in my favor right away, as it has, then that's great. I can tighten the risk as we have and let the market do what it's going to do on the news. So if it wants to rip, we're in a great position to benefit from it. If it doesn't, then we're going to have a really small loss. Okay, virtually break even at this point, 10 pips. So I'm totally cool with that. And you know, that's kind of the best way to get into these trades ahead of time. You want to know when the news is ahead of time, right? You don't want to try to analyze the news itself, in my opinion. You want to know when it is, because again, it can act as a catalyst. So Aussie says 77.50 right now, stalling at the short-term median line that we've got right here. Where is it? Right here, short-term median line. Here's the hourly chart. It's the same chart that was presented last night, by the way. We had the perfect support hold right here at 76.40 roughly. Big rally overnight into median line. So, you know, if we're going higher, we might be able to eventually, you know, kind of add to this trade if it breaks above here, then find support, say on this line, on this median line, right? Because it's been pretty good resistance and support at times. I mean, you had a very perfect touch here, a beautiful touch here, before NFPs. Here we have it last night. Okay, another touch, on the high of the day. So I want to see a push through here, obviously, and then for the market to hold up here, consolidation would be the best, and then we can look to add to that trade. So Aussie long add to it will be certainly on the radar. What about Kiwi Dollar? Because it is actually performing extremely well this week. Obviously coming from, this is the monthly chart that was shown a couple weeks ago, coming from, super crazy long-term support, if you will. I mean, if this level goes, then it's kind of like good night, Kiwi, and probably nothing for another 1,200 pips on the downside, all the way down here near 60. But so far, it is holding, and there's RB and Z in a little over 2.5 hours. So that's going to obviously, send a jolt through the Kiwi and see what happens there. But we are starting to press the limits of this near-term downtrend, okay? So we have obviously turned up sharply from the lows seen Friday, retraced everything going back through June, so new high for the month. As Mike would say, you've got Mark, is my screen changing from this? Yeah, I'm not sure. I am having some technical issues here today, so I might have to upgrade the equipment here, but apologies if that's the case. But as Mike would say, with Kiwi, we have broken through the opening range high of the month. And then opening range high of the month, that first day high is 71.50. So if we look at the short-term picture for Kiwi, or the daily here, I should say, if we break above this upper parallel, which has been very clean resistance before, it was in the last short covering rally up here on the 14th of May, then we're likely to, see a much further gains up towards probably, well, I'd say this upper parallel, but as far as when that comes into play, towards the end of June, it's all the way up near 75, okay? So too early to tell on that one, but as far as where we might be headed. But I do want to point out the short-term parallel here, okay? This is the structure to work with. And, this old median line here, the sharp, steep black one that we've got going on, okay, pretty decent, right, as support and resistance looking back. If we were to get a dip on RB and Z, and look, I have no clue what's going to happen on RB and Z, but again, this is how I like to go about it. So this is basically your hour of RB and Z, like right here, okay? You do have a confluence for potential support down near, basically right at about 71 again. Okay, so we'll see how RB and Z trades, but if Kiwi pulls back on it, beware of that initial fake out. Okay, beware of this thing holding down near 71 and then ripping a lot higher. Okay, obviously we've seen RB and Z move Kiwi substantially. It's also a function of when it is released. It comes out, as markets are rolling over and liquidity is not all that plentiful, and you get all kinds of spread blowouts and crazy gaps, and it's just difficult to execute sometimes. So I'd be aware of that. Obviously, I'm not advocating anything here. It can be a little risky to trade around news events like RB and Z in particular. But what I will watch for is for Kiwi to potentially come down here and hold the 71 figure, on an initial news spike lower. So I'd watch that extremely carefully. At least for me, I think that's where the trade is, right? Without having any clue about what RB and Z is going to do, if there is an initial spike lower as part of a broader bottoming process, wouldn't be the first time that you saw that happen, right? You get a pullback, in the context of a broader bottoming process, pullback on news, okay? Nice confluence to work with at 71, and then start looking higher again. And if it breaks above, then look out, because the target for this thing would be would be 73.76. Pretty close in line with the spike low down here on April 1. So that's where we are there. All right, so we've looked at Aussie, Kiwi, Euro. Look at dollar CAD now. Been kind of following dollar CAD really closely for the last few days. Dollar CAD really kind of been the leader since NFPs at least. And, you know, here was NFPs. We double topped here, short-term double top. The target for this, as mentioned, is 2171. You've got 2160s here. 61.8 is 2165. So you've got a lot of stuff around 2160, 2170. Dollar CAD breaking down at median line resistance actually right now. So we're at resistance as I'm speaking. Okay, this is resistance basically right now in dollar CAD, right? Raj says dollar CAD never reaches the resistance. Well, I don't know about never, but I mean, look, you know, you got setups that you follow, and this is, you know, these are the setups that I prefer to follow. I prefer to trade into confluences and whatnot, but just because it didn't happen the last couple times doesn't mean it's never going to happen. You know, so I continue to follow this. You don't know what's going to happen from here. If the market can break up through here, then you might get resistance towards the end of the week up at this confluence near, what's that, about 2365 or so, which is actually the breakdown level. So that would be a level horizontally that you'd be looking at to trade anyway, 2365. Again, the breakdown level from former support, now potential resistance, intersects with former slope support and the new bearish parallel, or downtrend parallel near 2365 on Friday. So that might be a level to watch as well. Let's see, those are the big majors I wanted to look at. Now let's get to dollar yen, because dollar yen, dollar yen. All right. So we've already taken out last week's move, and over half of the week prior move. So the it looks like the idea of dollar yen breaking out from a triangle, okay, is the correct one. I'll get to Mark asked about Kiwi CAD. I'll get to that in a second. But yeah, it looks like this is the right idea as far as longer term is concerned. Again, the long-term charts for dollar yen, right? So we talked last week, the first breakout objective, 2572, Friday's thrust may compose a thrust from a small triangle, which case dollar yen will retrace most, if not all, the rally. All right, so that obviously has already happened. What about now? Well, this decline is a little too violent for me to say that it is part of a fourth wave correction. So this entire rally may very well be done. All right. And we might be headed finally for something besides a very broad uptrend. So from here, though, trading-wise, you're basically at support now. We've come into support from a sliding parallel. You've got support at about 2220, line that connects off these prior peaks. So from here, I would not be surprised to see us base a little bit. And if you look at how dollar yen has traded in the past, or if you've traded dollar yen for a while, when dollar yen comes off of these peaks, a lot of times you will get kind of an initial snapback. What I mean by that is a decline, then a quick move higher to make everyone think the trend's still higher, and then you'll get an even larger decline. And we can see that if we just look at dollar yen, say on just a very simple rate of change basis. So dollar yen, let's look at I got rate of change on this chart here. So let's see where we got minus 1.4%. Well, this is already the largest decline of the year. So you got the largest decline since December 10th. Okay, which was where? Which was right there. And this is actually what happens. So right here, December 10th, and what happened the next day? You almost retraced the entire darn thing, and then it collapsed again. Okay. Next one, this was off the top. It was into a drift. This one, similar. Okay, decline here on March 18th. That was the Fed day. Drop, snap back, almost retraced the entire thing over 2 days. Then it continued lower. If we look back in history, prior peaks, similar. I guess you could look back to say, even the 2014 top, big decline that we had there off that was right there. That did retrace the whole, panic low, if you will. So in order to trade dollar-yen tops, you got to be pretty nimble. Don't want to necessarily chase it. There we go. So again, into support here, any sort of snapback, you're going to be looking for failure, resistance, probably near 24. And if I show you the short-term chart, you get an even better sense of that. Okay, so this is a 4-hour chart. 4-hour charts are great, aren't they? 4-hour chart. What we would want to be looking for here again is for this thing to potentially get some sort of, find some sort of a low, again, between roughly here and I'd say 22.20. So not a whole lot of room. I'm not advocating going long right here. At this time, if we start to see some nice wicks, maybe, a little panic low hourly reversal, 4-hour reversal even better, then yeah, different story. You might be able to take it higher for 100 or something points on the upside, maybe more. But the big trade, the one that's, could really, do something good to your account, I think, in my opinion, is again, to look for that big swing, that big turn. In this case, that would, the setup on that occurs as you get back into a new slope resistance, all right? So we've established potential slope structure here on the downside. We have a very solid median line to work with, 2 of them actually. We've got this one, the longer term one, okay, which has obviously been very influential at various points, okay? You can look all throughout here, okay? Hold on, all throughout here. This thing was awesome, right? So you got there, you got all this here, right? Here, you got all kinds of stuff going on. Here, right? Then you've got the shorter term one, which is not as precise, but still influential. I mean, you can see the big breakout you had from it here, all right? And then, again, big slice through it, break down here. For all intents and purposes, price trading like this is more or less like a gap, right? It's the same kind of idea. It's the same kind of emotion. So the point being is that these 2 upward sloping lines, okay, them being as very solid as influential and in their in their roles as resistance before, okay, may now become or support before and resistance may now become resistance for a final touch, and then the thing can fall apart. So what we'd be looking for in this case would be a retest of one of these or both as as resistance now. And then if that holds, or you can look to take a nice short position, preferably one with some good size with a tight stop, and then you can look to ride this thing down and have a very enjoyable summer. So that might be the next really solid play. Let's see here. I was asking about, sure, to touch on crude. So there are a few questions that I'm going to touch on, obviously. Going back, we've got pound yen, S&P crude, Euro Aussie, so I'm going to write these down. I'm just about done with what I, really wanted to get through, and then I'm going to take all your guys' questions and I'll cover those. So far we've got pound yen, pound yen. We've got S&P. We've got crude, Kiwi CAD, pound dollar, Euro Aussie. All right. So there we are. All right. So final thought here from me before I go to the questions. If we look at the quotes today, okay, you'll see obviously this is the big gainers, obviously against the dollar, dollar yen, dollar rand. One that caught my eye a little bit just because it's been in such bad shape against the dollar is the dollar Mexican peso, right? Dollar Mexican peso is down. It was down over 1% earlier. It's down 0.8% now. And so I wanted to share with you a quick chart here on dollar Mexican peso. Now this is a weekly chart, okay? Excuse me, the burps here. So this is a weekly chart of the dollar against the Mexican peso. And these dots, if you can see the dots, the red dots indicate what I would term bearish divergence, and the blue dots are bullish divergence. Now, since these are coded levels, it's obviously rules to them, right? It's not just, RSI being, a specific point or whatever, it's not just with your eyes. So what this is there's a couple conditions. One, you've got to have the highest high in at least, I believe it's 60 something weeks. 65 weeks. And you've got to have RSI be below that level, but RSI also has to be below 65 at the top. Okay, and those of you that are familiar with me and that have been with me for a while, you obviously know the importance I place on divergence when RSI is below 65 at the peak and above 35 at the low. Okay, that's when you get reliable signals, right? You can say there's like divergence all day long and you'll get murdered. But in this case, look at the previous instances of the weekly divergence. We haven't had too many of them. This goes back, this chart goes back, I'm showing you back to the early 90s. Okay, and as far as the red ones are concerned, the sell signals, you don't have a whole lot of them. You got one here, which would have been absolutely terrible. You would have gotten run over by a truck. Okay, the September of 04, good signal. Couple signals last year, August 2013, 2 years ago, and then last year, January 2014. That was the taper tantrum initially. Remember that? Yeah, well, look at what's happened since then. And now we got one now. And yeah, Mark, you're right. It says it looks like the red dots, the sell signals are a lot more accurate than the buy signals. And I think there's a reason for that. It's almost like when you look at this chart, dollar Mexican peso, think about the dynamics of what makes dollar Mexican peso rip higher, right? Typically, it's going to be a little more panicky. The move lower is going to be typically a little slower. It's like the opposite of the stock market, right? When S&Ps are going lower, it's, fairly easy to call turns sometimes for a low, but calling a top in the S&P is darn near impossible because the dynamics, the emotions that make that move happen are fear and greed, right? On the upside, you've got hope, you've got greed. Those are not nearly as powerful an emotion as fear is. Fear is much more powerful, and it's much easier to see on the chart, right? So when dollar Mexican peso is going higher, it's typically fear. It's like reverse crash, right? When dollar Mexican peso is going lower, a little different. Maybe it's a carry trade that would be associated with hope, and you get the point. So it's much more difficult to call bottoms in dollar Mex, just like it is tops in the S&P, just like it typically is tops in carry trade type of currencies, which, look, to be honest, we don't have a whole lot of that anymore because interest rates everywhere are really low. But that's the dynamics that's the dynamic we're working with here, with dollar Mexican peso. So I just wanted to show you this. I don't necessarily have a setup at this point for dollar Mexican peso. I wanted to point it out. A short dollar Mexican peso here trade might actually be something that could work out really well for quite some time. You do earn interest on it. So, if that's something that you're into, a longer term trade could be very interesting here. You basically be buying Mexican pesos at, close to at record lows. So this is a record low for the Mexican peso, all-time high for dollar mex. So, just a thought. I mean, if this is something that you were going to do as a long-term trade, this is more like an investment. Then, do not, be the leverage. You can't really use leverage, right, with this. So be smart about it. Personally, I will wait until I get a clean setup with a clean entry and a stop that I know, I know I can place. I don't necessarily like to just say, well, I'm bearish dollar mex, so I'm going to go short, right? Even though I have evidence on my side technically and everything else, I would prefer to be able to sleep at night and know exactly where my stop is and how much I'm going to lose if I'm wrong. So I'm not going to just go short to be short. But if you had to tell me, Jamie, are you bearish or bullish dollar Mexican peso right here, I would say that I'm bearish dollar Mexican peso, right? All right, so now I'm going to get some of these questions as far as the markets we're looking at. We'll start with pound yen. And something that, for yen crosses at least, all right, something for yen crosses at least that you want to be aware of, and I kind of touched on it here with dollar yen, but dollar yen, when the dollar yen tops can be pretty, it's more of a process, right, than like a V-shaped move. We see a V-shaped move from the bottom. V-shaped tops are a lot more rare as far as dollar yen is concerned. Again, I just went through the whole reason of why. So with the yen crosses, I'm going to be on the lookout for a turn to the upside, maybe near 24.10. But as it pertains to pound yen in particular, which is what the question is on, look, I've covered for, kind of ad nauseum what we have going on with pound yen as far as the long-term picture, okay, is concerned. I believe this was in Sunday's post, right? You have 92.60 as a level that could be really interesting for a really big top. That's the 2008 low, March 2008 low, I should say, not 2008, March 2008. We had something quite similar happen with euro yen, if you remember. This was euro yen. You remember this was back in November. We traded up literally to the tick to the 2007 low. So those prior lows, those major lows, can be awfully important as far as highs and lows are concerned. And the red dot on here is 8 consecutive weeks up, which has only happened one time. Just to note here, I just noticed we've only had 8 consecutive weeks up in euro yen a number of times too, and they're all big tops. In fact, we had 9 up here at the top of all tops in 2008. So this 8 consecutive weeks up deal, and we had one at this top in November, it seems to be pretty significant, right, for some of these yen crosses. So here we are with euro yen. So look, the reward to risk, in my opinion, on the swing is on the downside. And I'd put first support at 185, okay? And we're at 190 right now. But where, does one look to get short? Well, first of all, let's ask ourselves a question. Do we have a change in behavior? We have a minor change in behavior, and this was pointed out several weeks ago. Remember, we had, I think the text from here is on this, actually. Yeah, this is the same chart I put up, right? We have the slopes that are working, and the descriptions of what the trend is at that time, right? We have a very strong trend because it's going up through the upper parallel, okay? We have a less strong trend, okay, because it hasn't gone as high through it. We have a weak trend because it didn't even make it to the upper parallel, all right? We continued to crawl higher for over a week since I posted this, but now the market has declined into what would be the support from this parallel. Now, when you have this, so-called space between, call it space. I don't like to call it a gap because it gets confusing because gap is a term for a different thing in the market, so, price gap. But call it a space between the resistance line and the price high. Okay, when you have that, it means that once you get to support, as we have, you expect it to break. In other words, you're already working under the assumption, and that's a dangerous word in trading, but you're already working under the assumption that the support is not going to hold, okay, because the market is that weak. So we have come down. In this case, we have held support. That doesn't mean it will hold, though. So what we're going to do with pound yen, here it is. We're going to look. Remember, you do want to sell on bearish slope, right? And probably not the best description of what's going on. Okay, well, this actually looks to be better already because look where the lower parallel was. Boom, last night. Okay, so what we want to do, find a confluence is even better. We go off the gap here and look at what was formerly support. And it looks like at some point, well, it's unlikely that we're going to get that high next hour because that's when that intersects. But you get what I'm trying to say is that you want to look for a confluence. So bottom line here is I'm going to be looking for resistance up in this region for pound yen. And then if it trades lower here and then inches sideways, maybe it meets it over here at some point, okay? But yeah, pound yen is set up for a decline, but it has been set up for a decline for a number of weeks. Okay, that just means that the decline when it comes is probably going to be that much quicker. So expect, again, we want to probably be looking to buy yen at some point, so that would be short yen crosses. So we'll be taking a look here, pound yen moving forward. But to answer the question on pound yen, what do I see? I see the same thing that I saw, a week or 2 weeks ago, is an uptrend that's very weak. It's very vulnerable to a very sharp reversal. And the way that the market's acted in the last few days, that may indeed be the case. We might actually that reversal might finally be at hand here in pound yen. So there we have it. Look at the S&P 500. I put up this chart earlier today. It was something to do with we're going to have a rip and then RIP. In other words, this was the same chart. So here we are. High this morning, 208. So again, no change here to longer term stuff on S&Ps. I mean, this is a big topping process. There's really not a whole lot to say other than that. As far as, the timing of this is concerned, we've run into resistance already from the month open, 2107. This is June futures again. Raj, is it a good time to short? Raj, we need to start thinking differently. Rather than is it a good time to short, we want to rephrase that and say, is there a bearish setup here? And if there is, if the answer to that question is yes, then then the answer to is it a good time to short is yes. Okay. By saying is it a good time to short, it does not really answer where the risk is and everything else. So also it depends how you're short. Are you short through options? Are you short outright on futures? Okay. So there's different ways to do it. If I look at just the price chart here as I have, we have to say a few things, right? One, we have held support, okay? Two, as noted in the long-term charts page, we have absolutely dreadful breadth and momentum in the S&P, in the U.S. stock market, leaving it extremely vulnerable to okay, Adrius, take care. Take care. Absolutely. You're welcome. We've got extremely vulnerable to a very sharp downturn. And this whole process is probably, could be something, the beginning of that. But as far as where to short, personally, right? I'm looking at slope levels. So the resistance zone has been met as far as the bottom of it. I'd expand that resistance zone up to 21.19 3/4, 21.20 or so up here. You do have potential slope resistance up here over the next few days. Something to be aware of is next week is what's known as quad witching week. Okay, that means that you have expiration on futures, options on futures, and single stock futures. Okay, typically that is a bullish. There's a bullish seasonal tendency around that, which is interesting because June is historically the worst month of the year for the S&P 500. So in a perfect world, we get the market holding up, and being really annoying. Like if you're a bearish, the market just kind of churns and holds and doesn't do anything for a week up here. And everyone gets really sick and tired of it, and then it just tanks at the very end of the month. That's something that could very much happen. We could hold up through next week and then fall apart going into July. And that narrative is based on the fact that quad witching's next week, as well as just where we are technically. Okay, so I have to tell you that I am bearish and specifically looking to enter short positions between 2108 and 2120 on S&P futures. That's the June contract. Okay, but I also have to throw that in there about the quad witching because it'd be stupid to completely dismiss it, right? So summary here, Raj, to answer your question, yeah, I'd be looking to for a short setup, a trade to be short. If we go any higher, as high as 21.19 in 3/4. Okay. You should have some sort of pause as far as being short right now, just because we have rallied off of this sliding parallel. Okay. And the fact that we've done that leaves us more or less kind of in the middle of a range, which is a very difficult place to be. You want to trade on slope lines, trade around the edge. That gives you the best reward to risk in a trade. So the first one's going to be about 21.13. Next one's going to be about 21.1750. The last one's going to be about 21.20. All right, and that's going into tomorrow. Okay. So your best bet, Raj, might be to wait just for this thing to clear out a little bit. We have the big rip. We've seen it before. You get the rip, and then you get some grind sideways to higher to kind of take everybody out of their position, and then look to get short for the last week of June and into early July. Personally, I'll probably be looking to buy some cheap put options after next week, especially if we stay up and volatility comes back down a lot. So that's how I'm thinking right now. Here was a question on crude. Wanted to cover that. Yeah, so crude's ripped higher again. This is July crude on the futures market, and we've just got a beautiful slope that we're working with right here. Crude has, come into what we would call daily reversal resistance, and you can see that as the high here, the high day for the move, which is what, May 6th, and the close that day is 61.89. Today's high is not quite there, it's 61.82, but you get the point. Good resistance up there, and we've pulled back over $1 so far. So crude is reversing. At this point, I think that you look for support on crude at 59.13. Again, please remember, this is going to be futures. So if you're looking at the CFD, which is called U.S. oil, I'm based in the U.S., so I personally can't trade it. That's why I'm looking at futures all the time, because that's what I can trade. Then I'd be looking to, I'd be looking at, say, 59.13, which is the close of the June 5th day. Okay, that's the reversal day. You want to trade, into those reversal closes. We call those daily reversal resistance, daily reversal support. So if you were to bring up, let me bring up U.S. oil for you on a chart here. Oops. Okay. So we'll check that out. We'll go to tradingview.com. And there we go. All right, U.S. oil. All right, so if we pull up this, okay, so the level that I would be looking at on U.S. oil, if I could trade it, would be 58.91. Okay, that's the close of June 5th. So that's Friday's close. Happens to also be, going to be Monday's open, with Sunday's open, barring a gap. But you can kind of envision what this looks like as far as a coil. We're at pretty big resistance right now. This is long-term resistance on U.S. oil. It's a trend line that goes way back. I'll show it to you right here. And I pull up a weekly chart. You can see right there. Okay, here's the trend line. We're basically there. But this is, in very simple terms, uptrend, 1, 2, 3, 4, 5, 6 weeks of consolidation. And then, the natural progression is for a breakout of this thing, and then the objectives are going to be 66.30 and 68.61. All right, so I hope that helps. I'll be looking at 58.91 as support on the U.S. oil CFD, and 59.13 as support for futures, which at this point, front month is now July, and then that would be to position for a breakout of the 6-week coil, 6-week consolidation to take us higher up into 66 to 68 bucks, probably looking to go higher to 68, $69, to be quite honest. All right. Mark had mentioned Kiwi CAD earlier. Would love to take a look. I presented this. Awesome, audience. Good to hear, my man. Good to hear. So this is Kiwi CAD. Remember, we took a look at this a while ago, like 2 or 3 weeks ago, and we are just now getting into the big support. So Mark, I would not give up on this idea just yet, because look, I know that I said I'm looking lower in dollar CAD, but that could be wrong. Okay, and Kiwi Dollar could be that big of a rager on the upside. And don't forget, this is a longer term. This is longer term in nature, right? So you've got to have the patience to wait out, what it is that you're looking to do. This is not like we're looking for, this is not 100 or 200 pip type of trade here, right? This is something that's, this is much bigger. We're talking about, 600, 700 point ranges at this point. So, even looking at it from here where we are right now, we're not even at the lower parallel just yet. Right now, I would not necessarily want to see it break down here, because that would mean that we'd be below this median line on the downside. So in an ideal world here, what we do is we hold up a little bit and maybe kind of churn sideways into July, and then maybe get something like right here. But perfect world doesn't always exist, right? But I'm very aware of where we are in Kiwi CAD. We did get I had some interesting updates here. So, how do you want to play it? Look, obviously RB&Z is coming up here in just a few hours. Probably not the best idea to just stand in front of it, because we know that you could get all kinds of action. as far as you could get spikes lower, higher, all over the place. No reason, in my opinion, to sit with that ahead of time. But we'll watch this as it progresses, as we move forward. If we can start to get some legs, on the upside and look for some bullish slope to trade. But yeah, I mean, at the end of the day, Kiwi CAD is it's easing itself down into support, right? And we've been dropping now for 2.5 months or so. And at the end of the day, this has been a range. Watch for weekly reversal resistance, or weekly reversal support, I should say. Right? Remember? Weekly reversal, boom. This happened to the tick up here as well. Okay? Not quite to the tick, but not bad either. Might have been daily up there. But you can see the close for the high week, okay? And you can do it with the daily too. I don't know what the daily looks like. This is the weekly, but the close there. Yeah. Well, Mark, that's also why Mark says he needs to start tracking weekly charts. Absolutely. That's why I do go over the charting on the weekend and stuff. You want to be as prepared as possible. But that's also why you have kind of a way that you mark your charts, right? So when I have a bold black bar, it's a big bar or a big line, I mean, that I know is going to be an important level. It's the weekly reversal or daily reversal level. So I know it's there ahead of time. So even if I go to a daily or an intraday chart, I should still have that line there. It's there. So watch for 87.39 in Kiwi CAD. All right, that's a big one. If you want to get specific about it, it comes in next week. But 87.39 would be where I'd be paying attention to EuroCAD. All right, pound dollar. So been awfully tricky with pound. We did take a short last night at 53.90. Lasted a few hours, was stopped out, as most of the trades that are losers are. Probably gave it too much room than we needed to, but I didn't want to get taken out on a news spike either, and we did have news last night. So key pound dollar at this point has gone through the high volume level. The stop was placed above the high volume level, which was 54.40. So I was okay with that. Don't mind being taken out, on a trade, just kind of the nature of it. But you've got this median line, long term, goes way back, right? This line itself hasn't been all that precise, okay, as support and resistance. It's not like the sliding parallel, which was. But in any case, you do have the month open, or the year open, sorry, at 55.78. And you've got resistance up here at 56.10 from not just that longer term sliding parallel, which again is not that precise, but you do have it from this median line too. Okay, so 56.10. But look, in general, with the US dollar starting to break down, I'm not too sure about the short side on the pound anymore. I liked it when it was below here because we had short-term bullish structure to work with. I liked it when it was below this median line because that had been so good as support and resistance multiple times. But as far as, being short now for anything but more than a short-term trade, as in something that might last a few hours or even a day, I can't really say. 56, I would think, could do something as far as a pullback is concerned. But if I'm going to be short pound at this point, it's probably going to be on the crosses, probably going to be on pound yen or something like that. So pound dollar, wish I could give you more. At this point, I just don't see it. Okay. Euro Aussie, putting in a big reversal today. Is this going to be a J spike? Let's see. Euro Aussie is going to be a J spike today on the downside. And it's happening before we get to the resistance we were looking for. So that's interesting in itself. So here are the J spikes in Euro Aussie. As you can see, you get some good ones, you get some bad ones. It's just the nature of the beast. This was a really good one. This was a bad one. We don't know about this one yet. Good one, bad one, good one. Okay one, bad one, good one. You get the idea. So, if we are coming into a more important top, like this big reversal bar today suggests, that's cool with me because we are actually already long Aussie dollar. So that would be bullish Aussie at this point. Look at the momentum. And by that, I just mean RSI. So we are coming from above 70 on RSI, 240-minute RSI. We do have a pretty drastic divergence at the top. Okay, so that, if you have a top where you have an RSI 4-hour that's so-called above 70, overbought, whatever, then that makes me a little more inclined to look higher. But the fact that we have already broken down after having a nice, divergence in place kind of gives me pause about looking higher right now. So outside day reversal, I'd be looking at this point back probably towards the month open, 43.74, which is 200 points on the nose from here. As far as the trade's concerned, again, don't really have it right now, but if Euro Aussie tanks, then we're going to benefit anyway because we're long Aussie. Let's check out Joe Mancini. What's happening, man? So pound Aussie asking, still possible to hit 183 range. Yeah, let's check that out. Pound Aussie. Oops. What did I do here? Go to slopes here. So, and then we gotta end it here. Whoa, we're gonna get a big spike here too. Oh man, 183. Pound Aussie 183. You talking about 183? We're at 2 right now. So this might be the top we're looking for in pound Aussie. This is a heck of a reversal bar. We haven't had too. We get a lot more J spikes in pound Aussie or in Euro Aussie than we do pound Aussie. Look at the ones we've had in pound Aussie. Get some pretty good ones. Right? Top, bottom, false, top, kind of, bottom, top, bottom, top. It was close to a top, but it was a grinder. 2 of them at the bottom here before this thing went nuts. And now we have one that might be the top. So 193, yeah. So yeah, well, we're going to find out here soon. As far as where can we go, look at this. This is actually super interesting right now. So we have pound Aussie potentially topping out, another J spike today. Month open, took that out. Okay, took out the range for the last, 4 or 5 days. Look at how the market's traded up here. Okay. If we're using this median line as a reference point, touch it here, not touching it. This one is well below it. This is a big space. Okay. That's bearish. We're getting a weekly divergence as well up here in pound Aussie. We have some pretty awesome looking divergence on RSI with the daily. Look at this. So yeah, RSI, or I should say, I don't know what's going to happen tonight with Aussie data, but I do know that Aussie is in a position to rip higher, okay, based on just the analysis of these crosses, okay? So I'm going to end it there. Have more obviously out later with the post as always, but everyone have an awesome rest of the week. Remember, RB&Z is a little less than 2 hours. Be careful, don't do anything stupid. We've got employment tonight with Aussie. Content to sit with the position, see what happens, and maybe we'll be able to look for a spot to add to the trade at some point. Other than that, we're still tracking for Euro longs and might have some interesting cross trades coming up, specifically pound yen, maybe pound Aussie. So, all right, Mark, I'll put up a chart. All right. Okay, everyone, take care. Thanks again. Bye.